Good afternoon, Scott Redler, T3 Live. Welcome to today's recap, the Friday recap after a long week. A week that was very profitable for some people, a week that was non-eventful for some, and a week that was quite painful, depending on how quick you acted, how you maneuvered, this lower end of the range, and how quick your feet are. We talk about quick feet, which is what you have to be at, when you try and maneuver these markets. And we follow this set of rules, so this way we could always be a step ahead. And I want to congratulate the community once again. I don't think many people were in pain today, or people were more or less just trying to figure out what the next move is because they made the meat of this down move, or at least they got out of the way, out of their longs, as we had the worst week, the headline's going to say in years. And I think guys are doing a really good job maneuvering it, because technically things have been acting the way they should. And I know people don't want to believe it out there. Oh, technicals are dead, levels are dead. Technical analysis isn't what everyone says it is. You know what? I say bull, you know what? I don't want to get fined, so I'm not going to say the other part of the word. If you look here at the S&P, you will see a lot of rules that we follow that could have kept you safe and could have made you a lot of money. So take a quick look at the S&P. You will see this lower range and what started out on Tuesday. Here you go. This is this bear flag. This is a wedge pattern. This is the ascending channel, whatever you want to call it, after this head and shoulders top. So this was your first macro pattern that we outlined numerous times that could have got you out of harm's way once we broke this 1250. A lot of people made money short, or you could have just went to cash when IBD went to cash here or went to cash here. All depends on how you trade. Okay, that was then, this is now. Here is this range that the market's been trying to figure out. What's the next move? Do we continue to the downside after a pause from 1350 down to about 1101? Or is this enough, to potentially rally from after we absorb numerous headlines? So we take a step closer to this week. Here you go, guys. This is this week. All right. This is, you know what? Come back to me. You know what that day is? Looks like just a little, squiggly line to some, but if you're in this community, you know that is an outside day. That is a push through failure. That is a day when you try and make highs and you close on your lows. That means momentum's being lost. That gives you a red flag to sell some longs that we might not break above this range, at least not that day. Sometimes it can happen a few days later. That's the next step to look at, but at least not that day. So that's the day to take some things off and get, on the edge of your seat, because that's one of those days to take notice that could lead to a further down move. So then we had Fed Day. Take a look at the range again. You will see here is, that area that I said we need to hold to show some momentum and some commitment staying in this market. It didn't hold. So once we broke below this 1188, okay, this was your area to sell some more longs. Get the cash, and if you're really quick, get short. Okay, and then you had the move down to this rising channel where we closed relatively near. Momentum guys that work at places that, go out short when we close on the lows, got paid pretty handsomely, okay, on that big down open. And what do? We held the lower end of the range for now, from about 1220 to the low here of 1114, 100 handles or so. We weren't ready, just continue lower. So what does that mean? Okay, come back to me. What that means is that we have new levels to watch for next week. Now, some people came in today. I even tried to buy some things for scalp cash flow bounce today. No traction. After 800 points down for the Dow this week, we were up 35 points or so. Not showing that people are saying this market's on sale. There's a rush to get in right here. So obviously, we're going to have to see what happens over the weekend. People didn't want to be short or long. Or I guess it depends on your time frame, because the European Union could come out with some kind of crazy announcement, Le Tarp over there, and who knows, maybe it's taken positively or negatively, because I don't think anyone wants any more intervention. That's been the problem, and I'm not going to get into politics right now. It's Friday and I'm tired. But the bottom line is, if you look at this chart, you will see that if we hover below, I would say, this broken trend line or this rising channel, the longer we stay below here, the better the odds are, or the higher the odds are that we break the lows of this range and we get a nice short. Yeah, you can make even more money short to the downside, which could then give you a better buying opportunity. We couldn't do it from where we were on Tuesday to the lows because it was too quick. But now if we hover here and no one comes in rushing to buy, when we do break below this, I think some guys are going to make some good money, and we'll have to look at the signs. Because if you look at the weekly chart, you will see, once we start breaking below this area, the next real point of reference here is around 1040, and then you have the low from last summer, which is 1010. So now there are groups that have already done this. We talked about it off the charts earlier this week. The OAHs already well through this lower area. If you take a quick look at here, the OAH is crazy. The size of the damage that it's had. It already broke through this wedge pattern, and it's on its way to bigger support. And if the spiders follow and the diamonds follow, chances are it's going to get down to here. You look on the daily chart, you'll see this already was leading lower. So guys looking to short, looking for relative weakness, congratulations, this was a spot. Same thing with the XLF. It broke. It's already below this lower range, showing relative weakness. Maybe sometimes you get a little bit of a bounce back before it heads lower. We shall see. The XHB also, trying to break below it, below this little area. But then you have a little strength in tech still. You have a little strength in retail. So we'll see how that develops, because we know if we do wind up holding this low into the range, we're going to need some stocks to buy. And then once again, if we break below, we'll have to figure out areas that can hold for some of the best acting stocks, if there are any at the time, and I'm sure there will be. As far as gold, dangerous. This is why we don't press at highs. This is why we use a tier system, for trading lots, because I've been actually only saying tier 1 for the past 2 months, let alone trading tier 2 and tier 3 because of the frothiness of gold. In the beginning of the year, we talked about 1800 with an overshoot above 2,000. Well, we got to 1900. So when you're in your price target, you always have to take things off, even though the noise says a lot higher. And the ranges are getting really, really choppy in gold. A lot of erratic trading. Guys are having a hard time making money intraday. So I was like, just kind of avoid it. I'm like, if you have to be in tier 1 and you're still in tier 1, you're probably in it from when we were talking about buying gold at 850 or at 1100 or at 1400. So if you want to stay the course. But as a trade, I don't know. People are trying to actually get more short than long. And if you look at this GLD, this was that pattern here. People, this was that breakout failure, which was your sign to sell some of your momentum shares of the GLD. And then, you had a lot of choppiness in this little range here, which, usually means distribution. And you had some divergences here. And then lo and behold, we were trying to short in here, and it was hard to stay short overnight. And then pow, big days down. So now guys are asking me where's support, in gold and the GLDs. Well, here's an area. This one is, I would say pretty big. And then, this prior breakout area, is another. So for me, I'm gonna still be patient here, and I think that obviously we'll be able to maybe trade versus this low a little bit, or maybe find an 80-20 trade if it trades below this 158.55 and does one of these, red dog reversal types trade. Considering where it came from, that's why we trade. But this will be a spot to take a look. As far as silver. Silver has always been the tail that wags the dog. Silver, really doesn't have any uses out there in the world. Some industrial use. Sometimes there is a little value there, but it's not really a currency. And it was always just like the blind stepchild to gold, because everyone's like, oh, gold's at 2,000, silver's got to be higher. But meanwhile, in this last move higher, silver really didn't rally. So it showed you the technical weakness. It showed you had to either avoid or be very careful. And once gold, took the turn for the worse, the silver was below all the moving averages, well below the highs, never got back to the old highs when gold was making new highs, diverging. So it showed you probably shouldn't be there. Now I guess people are like, where's the bottom on silver? To me, usually these kind of breaks lead to lower prices. I will say that there is some sort of support right around here. So if you want to trade versus low, but I think chances are, we're going to see this level at least before, it tries to do something meaningful. But anyway, silver is definitely not a place where you should be looking to put a lot of money. Yeah, we'll try and trade it next week, but I'm not at all looking to place macro money in silver. We've been just looking for cash flow there, for the past few weeks, but it's been choppy and giving you a lot of clues that this would happen. Apple, trying to hold this upper range. I'm not sure if this is going to be it, but the market will tell us. Still holds in really, really well. Still, the cream of the crop. Trying to hold this lower area. I'll continue to look potentially long, versus this area. But if the market breaks 1101, chances are we'll probably be able to buy, into this area. If we hold 1101, this will probably be the area that holds. But you had a nice move, little corrective type action up here. This is an area to watch, but I don't think you need to be in a rush yet. If you have a long-term thesis on Apple, be in your tier 1, but you should not be in a trading tier yet until we get more clarity. Same thing with Amazon. Amazon was a little bit weaker, but still, holding yesterday's low. This is our new point of reference. This was a prior pivot, so this makes sense. And we'll see what develops here. We'll see if there's a trade. We'll see if it could get above this or stay below it and continue lower. LVS did that push through failure, a day to take notice, a day to get rid of stock, a day to sell some excitement, because you never know what it's going to lead to. And what it led to is a decline, and you could have saved yourself a lot of pain, which I think a lot of guys weren't even talking about being in there long, so congratulations. But just to show you why, here is this push through failure, reversal. Sometimes it leads to nothing, but you're better off on the sidelines when it happens, especially considering the move that it just had. You look at the big range here, you can see it a little bit more pronounced. Push through, come back below, outside day, sell some, especially after a big move. And now, now it's a little wishy-washy because you had this ascending channel. It's broken below, and the longer it stays below this area, the more the more prone it is to maybe discounting more. So this is the new point of reference, and we'll see what happens. If the market breaks lower, this can also. Look how whippy this stock is. When it breaks hard. When it breaks, look at this. It breaks hard. So this time we'll see if it's different. We'll see if it holds higher, and that'll give us clues whether or not we'll see some more momentum at some point. But I do think at some point it's going to get back on its game and go, but it's going to need some help with the market. As far as the banks, some guys played it for a bounce today. I'm not even going to talk about it. Good cash flow. FCX worked a little bit, but it was nothing compelling at all. It fell towards the end of the day. A lot of renting longs right now, and that's it until we get a more hammered out bottom or we get more clarity. Now there's talk that the government's going to shut down, that they couldn't get the stopgap, and it's just so many headlines out there with so much headline risk, and I don't see any solutions or any great ideas. And I think one of the best ideas would be if I hate to say it, I don't want to talk politics, but the president did, a Johnson, where he said, okay, I'm not going to run for president next year. I'm just going to help, solve some of the problems, get the Republicans and Democrats together, and not just worried about being reelected. And this way, potentially, we could compromise, and he's just not worried about being in office. Because if he doesn't win next year, he's going to be a one-term president of the worst reputation out there, go down as the worst president in history, and he'll be a professor somewhere. But if he actually did some things that he campaigned on, whatever, I'm probably pissing people off by talking about this anyway. So, fact of the matter is, we can't control whether he's going to, do the right thing. We can't control if there's going to be a stopgap. We can't control if the major leaders in Europe are going to come out and try and do a lead TARP this weekend. All you can control is reading the technicals of the charts, seeing how the market acts to some of those headlines, see what's priced in, know what you could handle, know your time frame, and know what makes you tick, so this way you could handle the ebbs and flows, because there's a hell of a lot of them. So with all that said, crazy week. I think the headlines are going to be pretty nasty, but a lot of people in the community are going home feeling really happy. Guys on my desk had their best week they've had in months. I had a good week. A lot of people were high-fiving, not miserable, saying, oh, we were down 7-8% this week, or gold had the worst 2-day down move. Oh my goodness, I'm trapped. Guys knew sword coming, got light, and not saying everyone scored short, but at least they didn't get caught, falling asleep behind the wheel. And in that little kooky commercial with, I talk about taking off those glasses, I think guys didn't have blinders on, saw what was going on, and actually honed in very well to keep safe and also take advantage of the action. Get some rest this week and have some fun. I'll see you Monday. It's going to be another interesting week. Scott Riley, T3 Live, the final recap of the week. See you Monday morning.